Hello teacher, we are covering Finance Group 1. Today we will show with you the presentation of portfolio investment and its segmentation. I will go first with the executive summary. The presentation describes exactly how given fund 1 billion dong is delivered among 5 stocks listed on the Ho Chi Minh Stock Exchange. This document is made up in 3 sections. The first one, we briefly introduce 10 firms on our watch list, provide more information their business operation and organizational productivity in Vietnam market. And the second one is a detailed assessment of company portfolio is selected depending on our company watch list and its addition to invest, risk and return, as well as the beta coefficient. And the final section is we focus how determine the way minimizing risk portfolio for 5 stocks chosen from the company portfolio. And the next part, my teammate will present.
Moving to the methodology, as a requirement, there are 10 stocks company listed on hosts that are chosen by our team. To filter out the top 5, we calculate each stock's annual return in annual risk by using the logarithmic and stdev.s formula on Excel. For better coefficient of each stock, we also use the slope function to evaluate. Using a risk and return chart to plot all these stocks, we see that on the return line, 5 stocks are showing very positive signs that are far from the rest. Besides, in the term of the risk curve, most firms have the same ratio, with only a few large risk parties. Finally, we decided to choose the best 5 stocks by our calculation and motto, high return and acceptable risk. So our watch list involves 10 stocks: SSI, FPT, VCB, BID, VIC, HQC, PRD, LCTD, HPG, and MBB. Finally, our portfolio involves 10 companies: PDR, FPT, VCB, BID, and VIC. Moving to the next slide, please.
So first one, I'll talk about the Cotecons Construction Choice Stock Company, which was established in 2004 and has successfully expanded and boasted reputations for completing projects of the world class in the residential, commercial, hospitality, infrastructure, and industrial sectors. Also, Cotecon was listed on the Vietnam stock market in early 2010s. So for its growing potentials, first one, economy revives and thrives through creating opportunities for construction businesses as well as Cotecon's. Second, the growth of international businesses and further corporate expansion are driven by the rising need for warehousing, which in turn promotes investment in Vietnam's logistic infrastructure. So moving on to its risk and return. From 2017 to 2022, the yearly average return of Cotecon is around negative 24%, indicating the financial loss of the company. Moreover, negative annual average return occurs when the return on an investor investment in the business is less than the total amount invested. However, the annual standard deviations of Cotecons from 2017 to 2022 is 30.96%, suggesting that the expected return could change from 24.39% to 39.96% each year. Other securities outperform Cotecon stock for the following reason. First one, under double pressure from the COVID-19 epidemic and rising construction material prices, Cotecon is entering a difficult period, causing the business index to drop quite sharply. Second, Cotecon's profits were affected by a significant increase in administrative expenses due to the prepayment of expenses for employees corresponding to additional salaries and bonuses. So here in the chart, you can see that Cotecon's annual average return is the lowest when compared to other stocks, specifically PDR with 35% and HQC with 2.9%, while the annual standard deviations is 39%. And the next one is the food technology companies were renamed FPT corporations in 1988. Software information and system integrations, telecommunications, education, and training make up the majority of the company's revenue. In December 2006, FPT was listed on the Ho Chi Minh Stock Exchange. So for its growing potential, due to the rising demand for digital transformations, revenue from new technology-based digital transformations in the first quarter of 2022 reached 1.6 billion Vietnam dong. Additionally, with a revenue growth rate dominated by FPT ecosystem is also ambitions as FPT's primary growth engine in the long run. Moreover, revenue from telecom services increased by double digits. These revenues increase not only confirming its strong footprint in the market, but also being expected that the company will be more profitable in the future. So for its recent return from 2017 to 2022, the average annual return of equity is approximately 29%, indicating that if an investor invested in 1,000 purchasing share of equity in that period, he would receive around 1,286 after a year. Additionally, equity has an average annual standard deviations of 20.17% from 2017 to 2022, which suggests that the yearly rate of return may fluctuate by 28% per year throughout that time. This number can be explained by first one developing made by FPT ecosystem with more than 100 platforms promoting revenue growth. The second is FPT's comprehensive digital transformation strategic consulting partner of a series of leading organizations and corporations in many sectors. So in terms of information technology, CMG and BNG were expected to be the rivals of FPT. According to the chart, FPT's annual risk return is low compared to CMG and BNG. However, this indicates a smaller risk for an investor to manage their capital.
Moving on to the next company, which is the PDR, which stands for the Fact that Real Estate Development Joint Stock Company, formerly known as Fact that Construction and Housing Trading Joint Stock Company, was established in 2004. The company mainly operates in the field of construction investment and business, real estate, housing, business services, tourist resort, hotel, and high-class resort. And PDR has been listed on the Ho Chi Minh City Stock Exchange since 2010. And the reason why our group chose to this company because their growing potential. The first one is Vietnam has a high potential in growing the real estate, and Vietnam is the most dynamic market in Asia, maintaining an average growth rate of 15% per year. Real estate is forecasted to have a very positive outlook in the next 20 years. Urbanization is still low and taking place strongly. The urban population of Vietnam is currently 44 million people, accounting for 45% of the population. Vietnam had 862 urban areas. In 2025, the urban population is forecast to increase to 52 million people, accounting for 50% of the population. And the second one is the fact that has some quality projects in the future. After recent major developments, the world economy is having a very clear movement in rearrangement. In that situation, a very noticeable trend that is that foreign investors choose Vietnam as a destination for the reallocation of the investment flow. However, the land fund for industrial park development has gradually narrowed. Therefore, it is necessary to deploy quickly and effectively to soon have new industrial parks. In fact, they had closely monitored and evaluated the situation to fully prepare all the necessary foundations for investing in projects capable of optimally meeting this market demand. And the next, we will analyze the risk and the return of the fact that real estate. The annual average return of PDR for a 5-year period from 2017 to 2022 is 35.15%. So if you invest $1,000 for a year, by the end of the year, your investment will grow to $1,351.5. And additionally, PDR has a standard deviation of 29.43%, meaning that there is a 29.43% chance that the rate of the return may fluctuate in the 5 years between 2017 and 2022. And this number can be explained by the first one is the fact that has accomplished some several projects in the past. And in fact that Bowcat, Resident, the Everest, Infinity, the Millennium. And beside that fact, they had ongoing projects that are promising to bring a high profit. And in this figure, we compare PDR with other competitors in the same industry, such as Novaland and Nam Long Group, and expected PDR outperformed their competitor with the highest annual average return. Also, PDR had the more stable volatility than the others. And move to the next company is the Vin Group. The Vin Group, formerly known as the Technocom Corporation, established in 1993 in the Ukraine. The group mainly operates in the field of real estate, technology and industry, trade and services, and the social enterprise. VIC have been listed and traded on Ho Chi Minh City Stock Exchange since September 2007. And the growing potential for Vingroup is, according to a representative of VinFast, a subsidiary company of Vingroup, with a population of 100 million people, Vietnam promised to be a potential electric car market. Besides, Vietnam has a great potential for developing clean power sources such as wind power and solar power, with an important basis for electrification. And the risk and the return of the VIC is the average annual return for VIC from 2017 to 2022 is 15.68%. So if investor invest in 1,000, they will return 1,156.8 dollars, and the standard deviation is 29.44%, which means that the return will fluctuate between 15.68% and 29.44%. And we compare the VIC with other competitors in the real estate industry. Fields at the real estate investment main business, VIC had the second highest average annual return among three corporations, and VIC also had the second highest fluctuation between annual average return and annual standard deviation, which means VIC is more stable than energy within the 5-year period.
And the next company is PIC. In 1st April 1963, the joint stock commercial bank for forestry of Vietnam was established. The Bank for the Forestry of Vietnam is separate from the State Bank of Vietnam Forestry Exchange Bureau to become exclusive financial institution for forestry. Vietcombank was set officially on the HOSE on 30th of June 2009, and the growing potential of VCB is new operating model to adapt the situation of the COVID-19 pandemic, and the number one bank in Vietnam, one of the top largest bank in ASEAN, and 300 largest bank group in the globally in the next period time. After 2020, VCB2 plan hold up the position the best Vietnam, and at the same time gradually build up the bank the regional presence, and the next is risk and return. From 2017 and 2020, the average return is 18.91, 80.81, and the standard deviation is 30%, and this value can be clarified if VCB keep going to reduce interest rate loan to service consumer in province city after the COVID-19 pandemic. And the second one is despite the decrease in profit, VCB continue to engage in many activities that contribute to the prevention of the pandemic, and we compare VCB to MBB and BID. According to the information collected, VCB has higher volatility when compared to competitor. And next we move to the Hòa Phát Group. Hòa Phát is the classic Vietnam industrial manufacturing group. Hòa Phát began as a trading company for building machinery and equipment in August 1993, and has since expanded to trading manufacturing future steel-by-steel refrigeration since 15 November 2007. Hòa Phát has publicly traded on the stock exchange under the ticker symbol XB3. For many years, XB3 has recognized a national brand, one of the top 15 largest and most efficient enterprise in Vietnam, as well as the top 10 the largest private company in Vietnam. While the domestic market is impacted by COVID-19 pandemic, the export promotion assists Hòa Phát Group in diversifying its consumer market. And we move to the risk and return analysis. It means the ability at 90.90% average annual return, and 34.51 of the risk must be managed to overcome during the invest period. These two statistics can be explained by the following factors. The first one is the worst environmental disaster of Central in Brazil, and the second one is despite industrial general difficulty in increasing competitive pressure for the construction steel. Hòa Phát Group increased the market share, and Hòa Phát Group has the lowest risk due to the low stock dispersion in comparison with the competitor. Bật mic. Turn on the mic, Quỳnh Như.
I'm sorry. So next, I will present BIDV Bank. BIDV was established on April 26, 1957, and is known as the oldest commercial bank in Vietnam. BIDV's international transaction name is Joint Stock Commercial Bank for Investment and Development of Vietnam, and its short name is BIDV. The bank specializes in following fields: banking, insurance, securities, and financial investment. BIDV is publicly traded on the stock exchange under the stock code by BID from 2017 to 2021. BIDV pay cash dividends to shareholders with total value of more than 11 and 200 billion Vietnam dong. Ranking sixth on Vietnam stock market. Following is the growing potential. So BIDV was honored as one of the top 10 enterprises in the ranking and ranked fifth in the top 50 best enterprise in Vietnam during the announcement ceremony of the top 500 largest enterprise in Vietnam in 2021. BIDV has a widespread branch network throughout the country with a particularly dense transactions network in developed areas such as Hanoi, Ho Chi Minh City, Hải Phòng, Đà Nẵng, Phú Quốc, Nha Trang, Cần Thơ, and Sapa. The bank currently has over 191 branches and 854 transactions, and also has a transaction office in other countries such as Laos, Cambodia, Myanmar, Russia, and the Czech Republic. Next is the risk and return BID. So the annual standard in the period 2017 to 2022 average is 17.69% per year, reaching 43 and to 29 billion dong in 2021. 2.54 times higher than 2016. Consolidated pre-tax profit grew by 11.9% on average. 2021 will reach to 13 and 548 billion for the annual average risk in the period is approximately 40% and is obviously higher than the return rate. And next is the MP Bank. So the MP Bank on November 4th, 1994, the Military Commercial Joint Stock Bank (MB) was established after 27 years development in Vietnam's financial market. MB has made significant transformation steps, paving the way for financial transformation implementations. MBB offers a wide range of banking, securities, and insurance products and services. MB Bank was founded in 1994 with a charter capital only 20 billion Vietnam dong for the growing potential, with the goal becoming the most convenient bank. MB Bank's efforts in 2020 and early 2021 was recognized when it received 6 British awards in a row from the Asian bankers. MB Bank has also established an international network with a representative office in Russia and 2 additional branches in Laos and Cambodia, and it's also focused on digital transformations. MB Bank experienced exceptional growth in 2021, laying groundwork for the implementations of the period 2022 to 2026. Next, I will talk about the risk and return analysis. As a result, in summarizing the 5-year strategies 2017 to 2021, MB has expectations. MB achieved a consolidated pre-tax profit 16 and 527 billion Vietnam dong in 2021, and the consolidated bad debt ratios is 0.9%
The group's debt coverage ratio is 349%. For the annual average risk is approximately 40% and higher than the annual standard deviation is 17.29%. Next.
Moving to the SSI Security Joint Stock Company, established in December 1991, is one of the most long-standing firms in the Vietnamese stock market. At present, SSI has 14 branches operating in Ho Chi Minh City and Hanoi Capital. From 1991 to 2021, SSI authorized capital raise 1,500 times. Only a few Vietnamese enterprises are able to achieve this success. Moving to the return and risk, the rate of return of SSI has always observed as a small portion compared to other index. Besides, its annual standard deviation belongs to the top of the highest one. Currently, VCI, AGR, and CTS are formidable competitors of SSI. The rise of VCI puts the SSI at the risk of falling from the top position. VCI has the most reliable percentage, and AGR creates the largest distance. Moving to the HQC, business and the Hoàng Quân Real Estate Consulting Trading Service Joint Stock Company belongs to the top leading educational and financial investment group in Vietnam. HQC noticed that their strategies must be diversified to ensure the revenue. Hence, the company is celebrating the attention to other commercial real estate segment. It is said Moving to the return and risk, it is said that the annual return rate of HQC accounts for the lowest percentage among the watch list, with 9.92% only. The annual risk show that the level of their money invested fluctuates from 9.92% to 48.63%. The non-positive growth signal is making the investor confidence level declines. There are three popular competitors to HQC, which is DHR, EVG, and LGL. Although HQC return rate is very low, it is much better than other stocks. In addition to the low return, these stocks are also high risk. It can be seen that the profitability when investing in these companies is very low. The customer may have to bear a lot of debt result on their equity. That's the end of my part.
So next will be the beta or analysis about BID during the 5 years from 2017 to 2022. BID's beta coefficient was 0.28. The stock beta coefficient showed that its return was 28% higher than those of the market. At this level, the BID stock risk index doesn't change much. When the beta volatility went up by 10%, the value of BID share only went up by 2.8% and vice versa. EBIT beta coefficient were 0.75. This means that this stock has a level of volatility that is almost the same as the volatility of the Vietnamese market. This means that investors who want to invest in the technology and information industry group can choose EBIT without worrying about it in terms of the XBG's beta coefficient for the years 2017 through 2022. Its beta coefficient is 0.6. This is a coefficient that in theory this doesn't put investor at much risk, and the level of correlation between XBG share and the market is almost very high. When the market does well, XBG share do too and vice versa. The 0.10 beta coefficient for VCB show that the stock risk index is almost as low as it can get. The banking sector group is the one that gets most of its investment money from outside the country. This means that change in domestic market won't affect the banking sector group as a whole or VCB in particular. VIC beta coefficient was 0.13, giving investors a modest amount of risk when the market is turbulent. VIC shares are only affected by 13%. This reduces domestic market dependency. That's why VIC beta coefficient is almost nil. So, next slide, please. The beta market in group's portfolio, by the definition, the beta coefficient of the market is 1. The beta coefficient of our group portfolio is approximately 0.4, which is calculated based on the beta coefficient average of the 5 stocks selected for investment: BID, ABT, XPG, VCB, and VIC. Thereby, it can be seen that our team chose stock with a low level of risk. In addition, the figure also show that the return on investment will be nearly 60% less than the market. This shows that we choose to invest less risky than when the beta coefficient of our portfolio is not high and will not be strongly affected by the fluctuation of the index market. Next.
Okay, now I will move to the portfolio analysis. And for the portfolio analysis, the average annual return on our portfolio for individual stock is average to 19.99%. The return is more than twice as high as that of the overall Vietnamese stock market and far greater than that of the majority of the individual companies on our watchlist in our investment. And according to this, our group would get a thousand 1,199.9 billion after a year on aggregate if we invested 200 million Vietnam dong in each of the following stock: HPG, FPT, BCB, BID, and the VIC in an equal amount. The strong return rate of the stock FPT for the periods of 2017 to 2022 allowed our portfolio annual average return to achieve that high level. The standard deviation of our portfolio, approximately 21%, is lower than the wisdom of the standard deviation of the individual stock is 32%. This outcome is the consequence of our usage of the impact of diversity, which we use to lower the risk by spreading investment across different assets. The yield variance is estimated to be 4.35%, meaning that there is a chance that the actual return will vary by 4.35%. We believe this number to be reliable and secure enough for the investor to rely on. And beside that, our standard deviation of our portfolio is higher than the VN index, the overall stock market. Therefore, with our investment, there will be a higher risk than the overall Vietnamese stock market.
So the next one is market analysis. The market portfolio's average annual return from 2017 to 2022 is 7.70%, which is much lower than average annual return of all the stock in our portfolio. This indicates that within the 5-year period, an investor would receive an average of 107% each year if invested in 1,000 in whole shares. Additionally, the market portfolios of the Asia regions and the largest global portfolios are also included in the comparison chart. The market portfolio's yearly average returns have surpassed almost all other markets, coming in at 4.18% greater than the average of all other markets. Foreign investors turn their attentions more to Vietnam because of the persistent volatility in the global markets. So moreover, whole yearly standard deviation from 2017 to 2022 is almost 20%, which means that instead of returning 7.70% on average each year, returns vary by almost 20% each year. The market standard deviations is on the lowest level when compared to each of the securities individually and in our portfolio, indicating a low level of volatility and a small risk for investor over the same periods. However, despite whole outstanding annual average return, the regions of Asia have somewhat greater standard deviations than the global average. This number can be explained by two factors. First, one major central bank raising interest rates sharply to cool down inflation, while at multi-decade highs, will lead to a slowdown growth in leading economies, while the energy crisis depends is increasing difficulties in Europe, and the second one is political conflicts between Russia and Ukraine, and the crude oil price crisis have affected the Vietnamese stock market, especially oil and gas stock.
Okay, so for the minimizing risk portfolio, the covariance metric technique and the use of Excel will assist to offer the correct answer to determine the weight of each stock in our portfolio, which leads to the outcome of the portfolio median variance or the standard deviation. However, numerous processes must be completed before computing the minimal variance. Before allowing Excel to do its computations, several limitations must be imposed to assure the correctness of the result. The first restriction is that all of the changing weight cells must be positive integers. Another restriction is that the total weight cannot surpass 100%. Then all we have to do is let Excel do the work. And that's the end of our presentation. Thanks for listening.